Good afternoon, everybody. Welcome to your Friday edition. It is the weekend. Sorry for the little late delay here. We'll fix all the little glitches we got going on today, folks. All kinds of good stuff happening over here. There we go. I'm on camera. Before I get started with the whole topic for today, which is going to be Jerome Powell absolutely unloading the hammer at Jackson Hole, as kind of was expected, I guess. I have to give a shout out to our, or at least to my iTunes listeners. And for all the people listening to that podcast out on iTunes, you have to let me know if the stream audio sounds like absolute dog shit. I mean, I listened to a recording of Corey Lane's session yesterday, and I apologize because Corey delivered some epic, really good content, and you could barely even hear it. And I did not know this was going on. You guys said the audio sounded low, and I always checked it and bumped up my levels. It's atrocious volume, so I can't imagine how anybody want to listen to a show of that poor quality. So I will make it my focus this weekend to make sure I get all that audio dialed in because, man, it was bad. It was so bad. I'm embarrassed. Next week, I've got Justin Krebs on talking annuities and long-term investments. I've got Bill Addis talking bonds. I'm going to have, who else have I got on next week? I got a whole slew of people on next week. I have Todd Davis, which is a shocking one. Todd almost never, ever does radio or public appearances like that, so I am really excited to get him on the program. And then also on Wednesday, we'll have Jeff Manson on the program. So there you go. Is my face red today or the previous episodes, Chris? It's red because I'm rushing to get stuff done. I've had issues with obviously the market and then whiskey. So I decided to go with this one. So everybody always asks on Friday, what kind of whiskey am I drinking? I'm drinking Blinking Owl today, which is a local distillery, just a small batch distillery here in Santa Ana, Southern California. And the reason I went with that is kind of the bird theme. As we discussed today, we'll look at what Jerome Powell said in detail. For some of you who may have watched the whole presentation, which I would encourage you to do. Some of you heard the comments that he's being extremely hawkish, and there's dovish as well. Well, I went with the owl theme today just because that's what I had around. I didn't have any hawk whiskey. So let me get things started because obviously it was a pretty ugly day out there in our markets. I'll start with this. Jerome Powell drops the hammer. Had some fun with this little graphic here. I tried to take the little Western Exterminator guy and use my Photoshop skills to put Jerome Powell's face on there, kind of shunning the bull, which seemed to be intact. That bull was looking good. It was slowly drifting up. We had that uptrend. I was feeling optimistic. Here is the S&P 500. I was feeling optimistic because, it looked like it pulled back in the shorter term uptrend, and today just completely eviscerated all gains for the week and put a nice dent in a lot of my profits. Fortunately, I hedged this morning by buying some puts on the S&P and the NASDAQ, but it wasn't really enough to offset some of the losses in the bigger picture. And I'll talk to you about some of the puts that were exercised. As you guys know, I mentioned I had sold silver puts and I sold NASDAQ 100 puts, and that one came to bite me a little bit. So we'll dump into that. But let me talk about the Jerome Powell Jackson Hole Symposium Conference. That obviously is the main piece for the day. And I was going into it with the expectation that Jerome Powell would make somewhat positive comments and say things like, we are seeing a slow decline in the inflation numbers, which is encouraging, but we're not out of the woods yet. And we will be on top of this and monitoring the data and doing whatever it takes to get inflation under control. That's what I thought the statements would be. Oh boy, they were not even close to that. So check this out. Here is, if you didn't get a chance to listen to it or you got paraphrased on CNBC or Fox, here are the direct quotes from it. I'm going to run through about 6 quotes here that are just holy cow. Reducing inflation is likely to require a sustained period of below average growth. So right there, he's basically saying, buckle up, people. And I've been saying that on this show as well. Listen, you might want to start watching your expenses and, tighten things up a little bit because it looks like down the road we could see a fairly rocky road if these dominoes do start falling. And remember, the way I was looking at it from a domino perspective is I believe we have an unsustainably low job market at 3.5% unemployment, even if you believe those numbers. I just don't think that is sustainable. You look at any historical chart, 3.5% is not a sustainable number. So I think that's going to start to rise. When that starts to rise, I think that you'll start to see layoffs, more layoffs, which means fewer people have money to spend. And then all of a sudden, it becomes cyclical, and it just kind of spirals even more and more and more. And we've been seeing that unemployment, at least with the layoffs from big names, starting to pick up, right? For the previous 6-7 years, it's been a non-issue, now except for the 2020 dip. Yeah, Margaret, if you're gonna summarize it, it's pretty much what he said. He was kind of like, hey, listen, you're probably going to lose your job, but I don't care because I have to fight inflation. So some of these quotes, he really took the gloves off. This is not typical, in my opinion, Jerome Powell, candy-coated, soft, let's be warm and fuzzy, come here, give me a hug. I need everybody to sit down here because I'm going to punch you in the face real quick. So here is a couple more of them. Very likely to be some softening of the labor market conditions. Okay, that was kind of soft, and basically what he's saying there is, He did address that we have incredibly low unemployment, and that will probably rise. So he's already setting the stage for rising unemployment. Hello, stagflation. They will bring some pain to household and businesses. And he even went on to say, this is necessary to get these things under control. So what he's basically saying is, households, watch your spending. You're going to be hurting for a while. You might be, these actions that the Fed is taking, while it may drop prices in the long term, it's certainly going to have an impact on you directly right now. That may be unemployment. That could also be watching your investment portfolio disintegrate. Because if I have to take those two and say, is Jerome Powell more concerned with the stock market or more concerned with inflation? It's clearly inflation because that's their mandate. Our mandate is stable pricing. That's one of their mandates, is stable pricing. So they have to get inflation under control. That's their job. If they don't, then it's a breach of what they're supposed to do. So going to be ugly. Now, I got better quotes. The last one, I think, is my personal favorite. But when he was talking about raising rates, of course, as you guys know, the last meeting was 75 basis points. The meeting before that was 50 basis points. The meeting before that was 25. And it's like, okay, he's obviously escalating the rate at which he's raising rates. And of course, that is needed, if you listen to their talk track, because we have to fight inflation. And I would agree. I think it spiked way too much. But let's be honest, printing all the money that they did and now giving out $10,000 to all the people with student loans isn't going to help inflation. That's going to make it even worse. But his point was, there's no place to pause or stop, or not a place to pause or stop, which basically says, listen, that September 21st meeting that we're going to get, you're going to probably see rate increases. 50 basis points, 75 basis points, absolutely on the table. That was a pretty nerve-wracking one. I think that the markets were actually expecting them to calm it down a little bit. I still am staying at 50 basis points. I believe 50 is where we'll come in at. He also said, and I quote, restoring price stability will likely require maintaining a restrictive policy stance for some time. Now, obviously, there's tremendous ambiguity there because it says some time. Well, what is some time? All right. Well, give me some time. That could be 5 minutes, could be 5 years. But the point is, he's saying restrictive policy, meaning they're not backing off the rates. They're going to keep that pedal to the metal for whatever time it takes to get those Fed funds high enough that inflation is under control. And I'll show you a really cool chart here, which I think I shared with you guys before, but one of my personal favorites. Now, here is the last one. And this was his closing segment on the Jackson Hole. Now, it was only like a 10-minute presentation. Normally, he does like a half hour, 40 minutes. This was very brief. Here is the final closing statement from Jerome Powell at the conference today. He said, and I quote, we're taking forceful and rapid steps to moderate demand so it comes into better alignment with supply and keeps inflation expectations anchored. We will keep at it until the job is done. So let me ask you guys, when you hear that statement, it says, we will keep at it until the job is done. What does that mean? Right? Like if I have a recording of video for OTA, and I record videos every weekend called the Monday Morning Must Knows, when I finish that and I record it, my job is done. I know that timeline where it ends. I'm curious what you think. And there is no right or wrong answer. It's just an opinion. What do you think he means by until the job is done? Obviously, inflation's under control, but what does that mean? Does that mean that inflation's back at the 2% target that they've given us? Well, that's probably not going to happen for quite some time. And if you do think that we're going to get under 2%, you got to know that there's going to be significantly higher rates to get us back down to 2. I mean, it has to keep surging higher and higher and higher. Higher interest rates coming, okay, that's part of it, but what is that job done, right? Be damned the little man. I agree with you, Thomasina. I think that the average, the wealthy, it's not that big of a deal. The middle class, I think, are smart enough to figure it out and say, okay, I got to watch my expenses. The ones who I think are really going to suffer here are the lower class or those who are not financially responsible. People who just don't get it and not understand that there is going to be a constriction on what they can do, whether that's working or income streams available. It's going to be pretty tough. So I like your answer, Michael. It says not anytime soon. Yeah, it leaves it very vague. We need the breakfast, lunch, and dinner guy. So let me show you a chart of what I think this might look like. And I believe I've shared this one with you before, but I'm just going off of historical information. And what was rather interesting about today's session at Jackson Hole was he did talk about Alan Greenspan's actions in the past. He did talk about Ben Bernanke, and he did talk about Paul Volcker and how he's learning from past experiences. Now, of course, I personally think that they are in a very unique situation that's very different than what we had in the 80s with regards to why the inflation was created. But, it was nice to see him reference other people that had a hand in shaping our markets over the past, few decades. What'd you say there, Tom? Saying limit your spending will extend the recession. Currently, it's the third quarter, ending its fourth quarter in about 4 weeks. Well, I'm saying it for me to limit our spending, right? I really think that we should be doing that anyway, regardless of what the economy is. Just always watch your spending. Always live within your means. If you're making $2,000 a month and you're spending $3,000, we'll see in bankruptcy court at some point. It's an inevitability. But if you're making $2,000 a month and you're spending $19.99, you got $1 to save and to grow. If you're making $2,000 a month and you're spending $1,500 a month, you got $500 to save and grow with, and build a safety net for whatever may come your way. And I think that's really, really important. I kind of feel a little bit nervous here because I know a lot of people personally who feel like everything is fine, that the market's great. Yeah, I've got inflation, but I've got money in the bank, I got investments, and they're spending somewhat recklessly. And if things do come to a more abrupt stop, that could really decimate them. So, Karen, I think you're probably right. The job being done is inflation at 2%. Well, then it's going to be going on for some time, right? Here's a chart that I want to... Let me get a shot of this blinking owl, and it cheers everybody to a happy Friday. Well, he started talking about Greenspan, and no one can figure out what Greenspan is saying, right? Greenspeak. He was one of my personal favorites, honestly. I loved Alan Greenspan. When I started my high-speed day trading career back in the late 90s, there was a thing called the briefcase cam. I don't know if you guys remember that, but CNBC would zoom in on his briefcase as he was crossing the street to give testimony, and they'd be like, oh, look, there's paper sticking out of it. Oh, man. And the market would literally just start selling off right away. It was so comical watching Alan Greenspan. I loved him. And he actually did an interview once, and they asked him, the term greenspeak. And he was really kind of a candid dude. He goes, there would be times where I'd go to a congressional testimony and it had some junior senator that clearly didn't understand what they were talking about. And they would ask me a pointed question about the economy. And I would start off with a couple of sentences about what he wanted to hear and just go off on some crazy random tangents and come all the way back around having said pretty much nothing of value. And that junior senator would be like, thank you very much for your comments there, Mr. Greenspan. I yield, to the next senator. It was just brilliant stuff. Anyway, let me go and show you this chart. So when you say get the job done, I really like this chart. And by the way, this is from the Federal Reserve. This is from FRED, which is, Federal Reserve Education, where you can get tons and tons of epic charts with regards to market data if you trust the data. That said, if you look at this, really since they started tracking the Fed funds rate, which is back in here, you can see, it looks like they started back at like the 1955 or something, where you can see the blue line start. Well, the blue line represents the Fed funds rate, and the red line represents CPI, which is inflation. And almost always, you see the blue line higher than inflation. Well, notice what's happening here on the hard red edge. It's not even close, right? That hard red edge, you have the Fed funds rate is just starting to tick up. I mean, it's barely moved up, and inflation is soaring. Now, inflation's starting to drop a little bit. But, if inflation's sitting at 8.5% right now, and historically we see the Fed funds rate higher than inflation, does that mean we see the Fed funds rate at 8%, 9%? I mean, you talk about damage to the economy, right? That could really be significant if this does start to surge up there. So I thought this was a very nice chart to kind of help illustrate where we are in our current predicament. You know, if you look back here, and let's say, let me grab my pen, I'll get my drawing tools out here and do some artwork for you. As long as I don't screw it up, Merlin, don't mess it up. So if you look back here in the 60s, you know, we had Fed funds rate was significantly higher than what the inflation numbers were, right? Inflation's in red. Over here as well, once we had this surge up in the mid 80s, you notice that the Fed funds rate was actually moving up with the rate of inflation. Over here, let's see, where was inflation higher? Back in 2009, we had this little spike where inflation was above the Fed funds rate, but quickly came ripping back down. I mean, this to me, if I was to draw a price pattern, it would look like this. It's a question mark. Like, what the heck? What are we doing here? You know, I don't see anything like this that we can use as a historical precedent where we've had inflation surge so aggressively and the rest of it, you know, the Fed funds rate just barely moving. That, to me, is the biggest unknown. And I don't know what the solution is, guys. Obviously, I don't have a crystal ball. I put my money on the line, and I'll take my lumps where they're due. Today took some lumps on the market. Did hedge a little bit, but still got stuck, especially on my QQQ. So, you know, this is something very interesting going forward. I was really surprised to see how aggressive he was today with regards to his comments. There was sharp words. You know, usually he used soft words. He was using, you know, really aggressive things like taking forceful and rapid steps, right? That it shows their urgency out there. Maintaining a restrictive policy. That's fairly sharp there. What else was a good strong word that he used? Anyway, I'll leave it at that. To me, yeah, Patrick, he says inevitable fall. You know, my years and years and years of trading tell me when everyone thinks these markets are going to crash, that's when they're going to rally. And, you know, my trades over the past couple months have been predominantly with what that trend is giving us. Now, if you look at what's going on in the market right now, it's still plummeting. I mean, the futures went straight into the close of the regular market hours at dead lows, and they're tanking in the after hours again. We're down 4.5% right now on the NASDAQ. And I will put a little vertical line here just to show you where the oops, this is a daily. Let's go to a 5-minute. I'm going to put a vertical line here just to show you where we closed. Bam. All right, so that's 1 o'clock. Well, we've been drifting down ever since. And what's crazy is you watch when that announcement came out, it was like a really sharp spike down and then ripped back up. It's like, okay, the market's been okay with that. And then he kept talking and he started using those harsh words, and now market just started liquidating. And it wasn't just the NASDAQ, guys. I'll start at the bottom and work my way up. I mean, Bitcoin was down way before that. I mean, it was pretty much stuck down all day, down 4.77%. The NASDAQ, though, was just down periscope all day long, down 4.54%, closing at 12,559. It's almost a 600-point slide. Russell, same exact picture. You were down 3.79%. S&P down 3.72% or 77%. And again, closing at the dead lows and drifting all the way into the market close, the rollover, at deadlock limit lows. That's not a great sign for the markets going into the weekend. So I'll have to do damage control on Monday with some of the positions as I get exercise on my triple Qs. So here's the Dow as well. Dow was down over 1,100 points today, 3.33%. Gold down 1.16%. I mean, everything when he spoke today was wild ride. You know, we talked about that at the close of the show yesterday where I was like, hey, listen, watch out. Jerome Powell speaking 30 minutes in the trading session. It could reap havoc, and lo and behold, it absolutely did. But we did have something shining out there. Crude oil. Crude oil actually showed a little bit of a positive update, up 0.49%. So it wasn't all bleak. Here's your daily. I'll run through these again just to look at the daily and see what we can see from a numbers perspective. You know, right now with crude oil, I can't really say with confidence that I think it's going to go any one particular way. You know, if you look at it, it's just starting to make some new highs. It broke these recent lows, so it almost looks like it's doing a broadening formation right now. So no real clear direction on crude oil. Now gold, right? Gold came right back down. I actually thought we were going to keep rallying up, which is why I sold puts on gold because I want to own gold. My puts on GLD were, I think, 161. So I basically sold puts down here at this level for September. Those are still going to, I'll have to wait and see how those pan out. The Dow, though. You know, Dow, I was kind of thinking would come back down to this 32.4 mark. Well, we ripped right through that. Absolutely crushed that one. So my guess is by next week we could be at 31.8 is the next logical area for it to have a bounce. But notice that one candle. I mean, this one candle is the biggest I see on this screen by actually there's one way back here that we saw on March 1st where it gapped up and had a huge sell-off, but that is a pretty ugly candle. S&P, same thing. We ripped through all those demand zones I had in place. Unfortunately, Russell 2000. Now, the Russell 2000 is a little different because you notice that back here in the first week of August, you had like this kind of weird little sideways action going on. It was just 2 days where it just kind of hesitated, then ripped up, and that's right where we ended up back into. I still think it's the same picture as the Dow, which means, looking at these lower lows right around 1800 on the Russell. NASDAQ, real ugly today. Same picture. I think you're looking at 12.3. We could easily hit that next week. I mean, today, like I said, 600-point slide in 1 day. Another 300 is not that far off. So, and Bitcoin, who really cares? Bitcoin just seems like it's just sideways and stuck here. Not looking too good. Would have thought the Dixie would have moved up more. Yeah, I would have thought so too. And when you look at the dollar index, it did have a move up at the end of the day. However, earlier on, it was looking pretty nice. You had this really nice tail, and then, of course, Powell opens his trap, and look what happened. Absolutely reversed that course. And if you look at the price action here, it looks like some heavy money came in, or for whatever reason, just stopped this thing right at this line. You usually don't see things flatline like this, where it just ripped up, and then from pretty much the second half of the trading session, could not get above 108.85. It really seems to be that line that it's stuck under right there. So interesting pattern, plus it was making higher lows, which tells me that there's a higher probability that this thing might break to the upside. But you're right. Dollar index on that daily time frame, I was expecting a deeper pullback. As you guys know, I was talking with Corey yesterday. My guess was coming back down this 106.50 mark, and if it did, great. Pundits calling 3,900. Ooh, 3,900. I could see it. I mean, 3,900 is certainly where I think that this is headed. Do we get it next week? I think part of the trading world is we have to look at the announcement today and digest it. Now, I'm kind of bummed it happened on a Friday because usually what would happen is this would be like on a Wednesday when he makes his FOMC statement. Thursday, the market reacts wildly, and then Friday kind of recovers a little bit. Well, hopefully we can have a chance to digest all of this over the weekend and have some form of stabilization. If not, and that fear persists, then yeah, 3,900 absolutely in play for next week. Let's see, what else do I have for you? So as far as economic data, and you guys feel free to type in, I'm going to go back through here and look for comments and questions that you guys want me to address. This is what happened out there from an economic perspective for today. You had Jerome Powell's testimony right there, but a lot of this data isn't really that bad. I'm looking at the U.S. stuff here. It wasn't that bad. The core PCE price index declined much more than expected, which is a great sign for inflation. So, we got these really aggressive talk tracks from Jerome Powell about getting inflation under control, and lo and behold, the PCE price index is almost down to zero. That's great. That means we're not showing inflationary pressure, at least nowhere near what it was in the previous month. You have personal income. Now, this one, I always like to watch this one because I am a firm believer that if income exceeds or spending exceeds your income, then you're going to end up on the welfare line and going broke and filing bankruptcy. You have a significant decline in both of these, income and spending. But more importantly, the spending has declined at a much greater clip. To me, that's important, right? Cut your spending, go into save mode for a little while. Hey, let's not go eat those fancy dinners. Let's just wait for a while and stock up and save. Maybe eat at home. I know. As I go out to dinner tonight. Negative side of it, wholesale inventories. Went from 1.8, was supposed to come out at 1.3. It came out at 0.8. So that is a bit worse than expected from an inventory number data. However, we can make the argument that low inventory is a good thing because that means that they have more room to buy stuff and fill their stores. The other side of it says, well, they don't feel that there's going to be enough demand for this inventory, therefore they're cutting back on buying. So that's a double-edged sword depending on which way you want to look at it from. I hope Bill Bilatis can talk about China and their bond holdings. If you want, I won't remember. I usually write things down, but a lot of times I forget, Patrick. If you want, just put it down below the YouTube video and just say, hey, question for Bill is, talk about China's bond holdings. Bill will be on, let me give you the exact dates that these guys will be on just so you know what's what. Justin Krebs is on Monday, Bill Lattis is Tuesday, Jeff Manson's Wednesday, and Todd Davis will be Thursday. So it should be a full week. I'm going to like it. I like getting all these guests on the program. Now, if I can't fix that audio, I may ask them to postpone. I have to get that audio fixed. I'm embarrassed that you guys let me go so long with such an atrocious sound quality on those podcasts. So anybody on iTunes, I love the fact you download the podcast, but I owe you better. So you got to let me know these things. If there are ever issues, email me at TraderMerlin@gmail.com and say, hey, that was an unbearable show to listen to, and I will jump on these things right away and fix it. It is a good lineup, right, Mario? At least it's not me talking for an hour straight all the time. That's you do. Go out to eat with your girlfriend, stay at home, and eat. Yeah, well, we're not there yet, Glenn. No, Thomasine, I've actually heard in the past that some of these, every time the guest is, and here's the weird part, when I use Skype, there was definitely a drop in the audio quality between myself and the guest. When I use Zoom, it's significantly lower, and I got to fix it. There's some investments I need to make, which I'll hopefully pull those off here real soon. All right, let me go to a couple questions. So Gary, I think that you're here, right? Did I just see Gary? Oh, that was Glenn. Gary asked me a good question. He says, is there an upcoming Thrive schedule? And I thought this was kind of funny because I coincidentally have a Thrive shirt on today. So I don't know what kind of telepathy you're trying to pull here, Gary. But no, I don't believe there is a Thrive scheduled. Right now, I think that Online Trading Academy is still in this. Let's get our feet on the ground. I mean, it's still reeling from a pretty extremely unfortunate event with all that went on. So right now, nothing scheduled for Thrive. I hope that does happen because honestly, that was one of my favorite events. That was an unbelievably fun event to do Thrive in Las Vegas. Not just because it was in Vegas and there was so much to do, but just getting a chance to meet everybody and say hi and talk to people. One of the things that myself and Todd Davis and Larry Jacobs and all these guys love to do is if someone's having a problem, we'd like to help if we can, try to figure out how to address these problems. And man, I tell you, at Thrive, while it was great hearing all the good things that people were doing and how they were improving their trading, it was also good, kind of sitting down with people and say, okay, what's going on? And like, oh, well, I have this problem, this problem, this problem. And I was okay, well, here's, how I have fixed it for myself in the past. And that was just such a great event. So anyway, I saw the Monday Morning Must Know video. Which one? Oh, really? Oh, that's interesting. Shouldn't have been released. Oh, okay. All right. Yeah, it was this shirt. It was today. I recorded that this morning. That's interesting. It should not have gone out yet. That should actually be for Monday. So that's why. No Thrive event planned, but I've been pushing for it. I really would love to. It doesn't have to be in Vegas. It'd be fun to do it somewhere. Yeah, COVID. Yes, I think there are all kinds of different issues going on in Vegas right now. All right, let me go through a couple things, and you guys feel free to type in questions if there's things you want to have covered, and I will go over those. As you guys know, I sold puts on QQQ, so let me just walk you through what happened there. I got a ridiculously good rate on my QQQ puts. I sold those on Monday, right? So basically, I think this may actually be the line. I don't remember the exact price, but I sold puts and I did a 316 put. Now, of course, where we're at right now, I had two of those, and if I remember correctly, the 316, I got like $3.50 for the premium, which would have put me in there at 312. So 312.50. So the 312.50 obviously is up here somewhere, and we're obviously well below that. So at this point, even though I collected that nice premium, I'm still going to be down about $1,200 on that QQQ trade. So we'll see what happens Monday when that market opens up. My guess is we'll probably have a little bit of a move back to the upside once the market digests what's going on, even though it was drifting down into the close of the futures market. I will probably sell some calls against that on Monday, depending what the premium's like. I may actually do weeklies, but that was the first one. Second one's SLV. And I'm fine with this one. As you guys know, mine was a 1750 put. It would have been great. I was actually fine whether I got exercised or not, right? And that's the beauty of, for me, selling puts is I don't really care if I get executed or not. In this case, I'm going to get executed because we closed at 1736, which puts me down 14 cents per share on the SLV. However, I collected a lot of premium. It was like 35 cents worth of premium, which was 2%. And that ultimately would put my average price lower than where it is now. So I'm actually making money in this one, but we'll see. I will probably sell the 1750 calls and get a bunch of premium for the week. So not so concerned that I got executed. It was kind of disappointing because the way that this was working today on SLV, one point we were up at 1780. I didn't have any real concerns that we were gonna, sell off like this. And you might be right, Margaret. We could have a very, very bloody Monday. Who knows? Get some lock limit downs. But I can't do anything about it now. We'll just worry about when the market opens on Monday. Good to know my exposure isn't horrible on QQQ. And as I mentioned, I bought puts on I bought outright puts on QQQ and SPY. So I kind of playing both sides. I kind of did that as a little bit of a hedge, which will offset a lot of my losses. Actually, I have more of a short position with the put. So if I get a bloody Monday, I'll probably be happy with that as well. Look at Lilly. Want to know about Eli Lilly, huh? I don't do drug stocks. I don't do no drug stocks. Here's Eli Lilly, one of the major drug companies out there. Chart looks absolutely great. I mean, come on, how can you not like this chart? Higher highs, higher lows. The only thing you have right now is a little bit of weakness because it's not breaking through these highs and continuing the uptrend. But I would go so far as to say move a yellow box right to this area where it's kind of traversing back and forth. That to me is where you're stuck in right now on Eli Lilly. And if you're looking to make a trade, I wait for it to break outside of those bounds. You keep it as simple as possible. Now today we went from the top of the range all the way to the bottom, so obviously a pretty ugly day on Eli Lilly, but I can't trade this one, as you guys know. Drug stocks, I'm not allowed to trade drug stocks. So you got in at $2.99. Then I would say, Glenn, what's your objective and where's your stop loss? I think if you got in here at $2.99, you did pretty darn well. You're up $16 a share at this point. If it breaks down below this little area of consolidation, which is right around 314, maybe you just take your profit and kind of go, no, okay, that's fine. I'll walk away. You can always add to it, but don't take a loss on this one. Make sure you move your stop loss up, lock in some of that profit on this bad boy as well. Michael says, Merlin, do you have any merchandise? No. Oh, thank you, man. I don't have any merch. I've never really thought about it and creating. I mean, I have thought about it. I thought about creating like T-shirts and hats and some things like that, but I haven't done that. Maybe I should. I should maybe have like a Friday whiskey glass. I don't drink coffee, so I would never. I'd never have a coffee cup, but I guess I could have a coffee cup for my whiskey, so I don't look like such a lush in the absolute whiskey glass here. Stop loss at 309. Okay, so you're gonna pull out 10 points out of it. Good job, Glenn. Joe, the four major indexes are about to hit some daily demand, and that should slow them down. It should, in theory, Joe, but when you start to get panic, when you start to get that, feeling that it feels like the market's got a hold of today, and that's very evident by the way that we traded. I mean, when you don't have a bounce at all, that's a sign of panic. That's an automated unwinding of position. TraderMerlin shot glasses, I can do TraderMerlin shot glasses, or a whiskey glass, something like that. Maybe I will. I got an alert to sell puts on Veto today. Do you have any recommendations for good optional crypto exposure stocks? So, if you look at Veto, these are the Bitcoin strategy ETFs, which again, these are futures ETFs. Now, I don't know if I would give a short recommendation on Veto right now. I mean, if you're going to be shorting crypto or Bitcoin, I'd want it to be breaking some of these lows. And don't worry about the price, because if you break the lows here, if it gets down below $5, they'll do a reverse split on Veto. They'll just keep reverse splitting it until the price stays above 15. So I don't know if I would have issued an alert on that one today. I mean, it did break some lows, but part of me is thinking and feeling that we are going to see some more pain here. But the way that Powell phrased it and the way the media is responding and spreading the news, and you're seeing the headlines, that it's really ugly and that this is like a going to hell kind of moment for the markets, it almost sounds like a buying opportunity. I'm not saying a buy recommendation or anything here, but it's just like in my gut, you're going, sometimes you want to go counter trend here just because the emotions get so high. We've already sold off quite a bit. We had a pretty big sell-off. We had this nice little rally. Certainly a correction would be in order. We're still in that bigger downtrend picture, so It can play it both ways. It's funny because I'm actually long and short at the same time on the indexes at this moment, and I'll have to clear one side of those positions on Monday so I can capitalize on the bigger move. Selling puts on Veto, not short. Oh, okay, selling. Yep. There you go. I like that better. I definitely like the idea of selling puts on this one. Selling puts down probably at the 1150 mark, somewhere in there. I don't know how liquid they are. The big challenge, again, with crypto is regulation and what's going on with these leveraging sites. So, I'm in the midst of right now trying to fill out all the paperwork for the bankruptcy proceedings going on with Voyager and with Celsius. At both locations, I have quite a lot of money sitting at those that's now locked up. That's still a big unknown. And how does that all get unwinded? That's creating this kind of dark shadow over the crypto industry, plus the regulation side of it. You also have some things that Coinbase is doing that could bring more additional attention to them from the SEC. And if the SEC does slap down Coinbase on what they're doing, which I think they will, then you could see some more weakness in that crypto space. So be careful out there. As you know, crypto is ridiculously volatile. John, a day late asking this question, but is there a strategy for rolling my puts out of close? I don't particularly have a strategy for that. Options is not my my main area of expertise. Unfortunately, John, you should have been here yesterday for Corey. For me, it depends on what I'm doing, right? If I'm selling puts, I sell 30 days or less, and usually I'll let those ride all the way to expiration. I'll sell the ice cube and let it melt. If I'm buying puts, like I bought Qs and SPY today, I'm buying at least 90 days out, most likely trying to go for 120 because time is important as the buyer of those puts or buyer of the calls. So as it gets closer, I will not hold any long puts or long calls within 30 days of expiration. I'll always sell out way before that because, as you know, it starts to really, the time decay, the value of those options will just evaporate in the last 30 days. So those are my only two rules there with regards to rolling. Just close them out and open up a new set. TraderMerlin shirt is merchandise produced by me. Give me some ideas, Katut. Show me some shirts. I'll do it. I just got to find it. I'll find it. I can get some suppliers. I can get some shirts made. If you guys have ideas for shirts or merch, let me know kind of what you're thinking. And I was going to do TraderMerlin hat. Because here's the thing. Part of the reason that I'd like to do merch is so that, someone sees you with it and they go, oh, TraderMerlin. Well, they're not going to see a shot glass in your house unless you're sitting at your office taking shots of whiskey. That's probably not going to work. So like a hat or a shirt or a coffee mug, maybe. But definitely hats and shirts. I'll try to only roll it if I can get credit for it, right? All right, let's see. I don't think I had any other questions that came in from you guys that were sent in via... Yeah, no, done. Use the daily graphics. Think so? You think those are good enough? You think that... I don't know. For some reason, I look at that and I'm like, maybe not. I actually liked... I thought, the black one with the green would be cool, but the opening still has the different logos, which I think is kind of cheesy, and I don't really use Instagram. I use Twitter a little bit, a little Facebook. I don't know. You didn't buy iron-ons and let you get it's the do-it-yourself branding kit brought to you by TraderMerlin. That'd be fun. What else was? There are a couple things. We talked about the dollar index, but here's another one that I think was an interesting reflection of today. And that was the bond market. So you had the bonds were up 0.43% for that 10-year. We still are, not out of the woods yet. It looks to me as this most recent trend here is gaining some strength. I did take off we had a head and shoulders pattern drawn here. That is officially gone. No head and shoulders in my opinion anymore. So now it's just kind of anticipating how we react to these supply and demand zones for that 10-year. But really, to me, it's about what the Fed does. If the Fed keeps unwinding their balance sheet, then you should see yields rising because that means they're flooding the market with more supply. They're going to have to raise their rates. Now, if we look at the longer term stuff, this is interesting. So here is the 30-year versus the 2-year. And of course, if you don't understand bonds, if you invest in a 30-year bond, you should get a higher rate of return. Why? Well, because you're committing for a longer time. If you commit for the 2-year, you're only in for 2 years versus 30. So you should be getting more reward for the 30-year. In this case, you're not. You're actually getting 0.2% more for holding a 2-year than you are for a 30-year. That's almost a quarter of a point more for holding a 2-year versus 30. That is broken. And that's the 30 in the 2. Here's the 10 in the 2, which is 0.36%. Here's the 10 in the 1, which is 0.33. So clearly inverted, just not looking good. With regards to the yield curve. I thought I would just share that with you there because we had seen that 10-year rally up, and now you are clearly, let's see what they said about the Fed funds rate today. Let's go to the FOMC. You had this spike up here a little bit today. Oh, it's still moving up. When I shot morning must knows, this was like at 58%. Now it's at 61. So you're seeing an increase. Everyone's kind of slowly eyeballing this 75 basis points. I just don't think that things are that bad, right? If you raise 75 basis points, it's basically the Fed going, we have a huge problem. Well, what we have inflation is slowly coming down. Now, it's not meaning it's done, but man, we've gone from 9.2 to 8.5. Well, that's a 0.7% slide. That is fairly significant, I would say. Now, if that does post another quarter of that, or I'm sorry, another month of declines, well, then they don't need to be as aggressive with raising Fed funds rate. So again, I will still hang my hat on that 50 basis point increase. But watching this FOMC calculator or calendar, one of my personal favorites. I've copied it in the chat many times, but here I'll just post it there for you guys. So in case you want to add that to your bookmark list, I always look at this one, and not only that, but I love looking longer term. So let's go out and look at, let's say, for the end of the year. Like, what are they forecasting for the end of the year? Right? They're saying right now we're at 2.5%. They're saying we'd be up another 1.25%, 44% chance of that at the December 14th meeting. And you notice that it's been like that for a while. There's been a little bit of a pop in the prospects for a 1.5 point rate increase by then, but that's it. True. Yeah, but here's the problem I have with it. Again, at least I'm not a central banker, so I would never want to be in that situation. I think central bankers have a very difficult job. You love them if you're long and things are going great. You think they're the Antichrist if they're going against you and if markets are bad. So the reason I don't think you want to have a 75 basis point increase is we still don't know the exact impacts of the 25 basis point increase we had at the beginning of the year. It takes 6 to 9 months for a rate increase to get all the way through and actually hit the bottom line of companies. So, the 25 basis point one, that was really tiny, but we've had the 50, and we had another 75. What happened, it's almost like you're slamming on the brakes, but you don't get to feel the effect of the brake for another 2 miles down the road, right? So now they're like really hitting it hard. The car may already be slowing down, but it's just not fast enough. So, can you over accelerate or can you over hit the brakes? And that may be what's happening. So I personally would throw 25 at it, throw 25 at it, throw 25 at it, and just keep on going. Doug, he says, TraderMerlin daily quotes. I think I come up with 365 of them, but probably about 200 of those are going to have profanity in it. So I don't know if that would be a big seller or not. Again, I do love the ideas. If you guys have them, send them to TraderMerlin@gmail.com. I'll make a list and let's see what you know what I should do. I should I should just put on a trade and make it like a public trade so everybody can see what's going on, and take the proceeds and make all the merch with that. See how that works. Chris, you'd use a TraderMerlin mug? Well, you could just fill it with water. You can fill it with water. Let's see, what else do I have here? The U.S. So there's a question came through from MJ. Long, GOVT. So you're looking at Treasury bonds. Well, first thing that I don't necessarily know if I want to go long Treasury bonds. So obviously you're not looking to it's not like you're going and making a lot of money off the underlier. You do have a dividend that's being paid out, but it's obviously very, very small. But you do get your monthly payments here consistently. So so you have some income stream going there. Buying this right now, I don't see anything here that really says I'd like to buy this one. If they do raise the short end of the yield curve, then what happens is those yields should rise, which actually means that the price of this bond would be going down. So I would say no to that one, NJ, personally, just because if this is selling off, that's been because rates have been going up. And if rates continue to go up, as I anticipate, because what the Fed is doing, and they're talking about raising interest rates, then I expect this U.S. Treasury bond ETF to decline in value. So no, I would not actually be looking to buy GOVT. I'm a beer guy. I love to have a nice glass mug. Maybe TraderMerlin pint glasses? You set up a meme trade with all of us? No. Actually, and by the way, I did... as you guys know, I was playing around with Bed Bath & Beyond just for fun, just because it's just such a stupid thing. What did it close at? Close at 1070. So I was exercised at 13. I exercised at 16, I believe. 13 was my average price. I sold the 1050 puts when it fell, so I'm actually going to end up breaking even on this one, even though it's $5.30 lower than my original purchase price, the strike price that I sold. I will actually break even on this one. So the beauty of selling options when premium is really, really high. I collected a ton of premium. That increases in interest, hits bottom line. So I think you're talking about GOVT there. I mean, certainly that could be a target, right? If you're looking at this picture right here and saying, oh, if it gets down to this bottom, well, for it to get there, you're going to have interest rates keep going up. And if you look at this picture here, right, let's look at it from that scale on GOVT. This is obviously the 10-year is not the same time frame, but they're almost inverse, right? And you can see that this last month we've had a big increase in the yield on the 10-year. Therefore, GOVT has been taking a hit. For it to get all the way back down here to, let's say, $23, well, that you might, maybe the 10-year gets all the way back up here to 3.5%. So kind of inverse. Should be a wizard. You can. That's right. You can always do that. That goes straight into the account, and I buy things for the show out of what you guys tip me. So like the camera's new. I got a new tripod coming and lights and stuff, and hopefully I can fix this damn audio, which is going to be a chore. There are 9 quarterly increases, 0.25 by the Fed at the start of the previous administration. Well, look, I mean, we could point at every administration has something to do with rate increases, either up or down. One of the big things I like to look at is, let me bring it up here for you. Let's go. That's earnings count. Let's go to Forex Factory. I like to look at historical precedent and try to remember what happened when this situation was viewed last time. What happened when we had these issues in the past. So let me go to the calendar here, and we'll go out to September 21st when the FOMC meeting is, and look at the Fed funds rate. So I've shown this one to you before. Clearly, you just look at these last two. Clearly, we are, grabbing the oh shit handle with regards to where rates are right now. Right? It took us back here from 2015. It took us from 2015 all the way to 2019. That's 4 years to get from 0 to 2.5. And now we've done it in just 1, 2, 3, in 4 meetings. We jumped 25, then 50, then 75, and then 75. So, I mean, really, really, really aggressive. Now, let's look a little bit more historically here. And unfortunately, I can't go back before 2000, but you still don't see anything that is as sharp as what we're experiencing right now. Even back in 2003 and 4, they were very consistently, like every meeting, raising 25 basis points. To me, that's how you should do it. You should be slowly testing and raising slowly, and seeing how it impacts. Right now, this is such a quick adjustment. I think we will start to see some pain points from that soon. And again, we have so many weird effects hitting our market right now. It's hard to really kind of come up with a clear consensus of what should happen. My gut tells me markets are going down. We're going to see some pain. I have been going long simply because the trend has been up, even though it's against what I believe. Market doesn't care what you believe. Market's going to do what it wants to do. I do think that longer term, weakness for the market. You have way too many factors. You got the housing market just starting to stall and slow down. You've got the bond market is just erupting. You've got yields are starting to surge. You got the Fed unwinding their balance sheet. Way too much money out there. Now you got another, couple $100 billion worth of money being put in the economy to help people out with their student loans, et cetera. So, I did the writing on the wall just says more pain ahead. I just got wrapped up in the moment of let's go long, ride that trend, and it was fine. I did well. I made some good money on this trend, and we'll see how I can do on these positions here. I may have to close out my longs and just keep those puts. We'll see what I need to do on our Monday session. All right, I think that's going to do it for me. I'm kind of rambling over here. Now you guys got me all thinking about merchandise and things like that. Next week is going to be a very, very packed show with guests, as I mentioned. We're going to have quite a few of them on. We're going to have Justin Krebs, Bill Addis, Jeff Manson, Todd Davis. Those are going to be guests next week. And I will make sure that the audio is perfect. It's my goal for the weekend. If I don't have to leave the house, That's what's going to have to happen. I need to make sure that audio sounds great for you guys. And if there's ever issues like that, let me know. And don't feel bad to say, man, that was really horrible audio or something yesterday. I can take it if it makes things better. So again, comments, questions, feedback, you can put them down below the YouTube videos or anything directly like the merchandise stuff. Send in your ideas or whatever you have to TraderMerlin@gmail.com, and I will work on getting something done. Why not? It should be fun to have a little bit of Trader Merlin merch. That said, hope you guys have a fantastic remainder of your weekend. Do something fun. Be a good person. I will see everybody on Monday. Take care, everyone.